This is how crazy 2020 has been. Everything is breaking records to the up, but also to the downside. Major disparities have formed everywhere with no resolution in sight. People are waiting for more Fed money, more government stimulus, more helicopter cash. But this has never resulted in long-term benefits, and yet they push it because those at the top will always manipulate the system in their favor and trap those they want inward. You came here for the truth, so let me unveil that for you. Look, 2020, it's fantasy land. I know that some really don't care. They feel that whatever they need to do to advance themselves is the way that they got to move. And I understand that, completely understand what people are doing today. They feel that this is the time to put their money into the system, and they want to do that in the most high-flying stocks that they can. There have been other investments, though, that have performed much better than the S&P 500, but people are just unaware of how things work. Look, the actual rich people, the wealthy people, not the guy down the street who drives the BMW, not the other one in the corner that has a Lamborghini or a Ferrari. We're talking about actual wealthy people, the corporations, the mega corporations. These companies are able to actually print money, to create money out of thin air. We'll talk more about that today in the chart GPS, but essentially what we have right now is a system designed with debt. Now, you as the individual, you borrow with debt. You're looking at your credit card, 17%. You borrow on your personal line of credit, okay, that's lower. Still a problem though. There's all the loan sharks and they're charging you 30%, 40% and beyond that. This is a different story though for those big corporations, because they are able to actually create the system of, like, let's say, putting out corporate bonds. Apple does this, and they go into the marketplace, put their bonds there, and not only would an investor buy that, but you also have the central banks buying it. Now, when that happens, it is a complete bailout. It is actually printing money out of thin air to buy that. It's a system that you cannot take part in. You cannot, they can, they control the system. They designed it this way intentionally to make sure that they stay in the loop and you are simply dangling around. It's like the little fish dangling by the big fish and just trying to stay in their path, but ultimately at any moment they could turn around and swallow you whole. Let's get into the chart GPS right away. Global equities have rebounded quite sharply since the end of March compared with their usual post-bear market recoveries. We're looking at this over time, what has happened. You could see clearly we have done better as it relates to the stock market itself, but we need to also understand how much stimulus and how we have really eroded the value of the currencies. And that isn't obviously understood. And most people actually don't notice it because for the most part, they say, well, look at inflation. Inflation is very low, and so you don't have to worry. Now, at the end of this, if I have time, I'm going to show you what's going on with inflation, but let's just take a look at the next chart here. The secular decline in yields, nominal bond yields, GDP, and arithmetically weighted 1314 to 2018. That gives us many years to look at what has happened. And clearly, I mean, there are spikes, there are problems along the way. Like 1980s, there was a huge spike, and others that they mentioned here. But understand, as time has been going on, it's been getting lower and lower and lower and lower. And I think that we are encountering an area that the central banks at this point, they don't know what to do. And if they continue in the way that they have, and they sound like they're going to do so, we have a very serious problem that has basically never been presented before. The share of global negative yielding debt has increased as a percentage of the market cap outstanding over 25%. Imagine that a quarter of this right now today is negative yielding debt in the world. Now, some areas obviously bigger than others. The euro area is considerably large, but it doesn't matter because the whole world is moving in that direction. We could see these numbers in a year and it's probably going to look much worse. This is hilarious. Global ESG flows to Europe, equities growing steadily while all others are seeing outflows. Imagine that. The ESG funds, I've talked about this before, it's nothing real. This is an absolute fiction because they're nothing to do with, being green and so on. It's all the big names in tech. Every single big name in tech you can think of is part of these ESG funds. That's where the money has been going, and you can see the outflows that are actually taking place. The EPFR, again, providing this data, and that's the lighter blue region. That's where the money has been heading out of and where it's been going into. We have the FANG stocks on one side, but now we have the granolas. By the way, these charts are from Goldman Sachs, and you could see you got Glaxo in here. You've got all these different tech companies, as well as some other, you got European brands and so on. I just think it's been interesting to look at this over the period of years. It's from 1990 up until the present. It has been growing tremendously. Growth has outperformed since the global financial crisis. We have seen this, of course, because you don't want any value stocks today. No. It's all about growth, and that's clear, especially with the tech stocks. The velocity of the drawdown and recovery rival the global financial crisis. This is just showing us a 20-day U.S. investment grade and high yield bond excess returns, just comparing them. I just wanted to note this. You could look at it for yourself, but we have covered how intense that was, and it's still going on today. Remember, the problems really did start in September of 2019, and nobody in the Federal Reserve really acknowledged how bad that was, and that's why we had such a big shock in the following year. That was the underlying problem that was exposed, covered up now, but it will return. You remember the CDOs from the financial crisis? That's right. Well, we have the CLOs, which have grown in replace of that. The CLOs have actually taken over as being the favorite choice. But anyway, look at this. Mezzanine CLOs deliver the best absolute and risk-adjusted returns. This is just showing us the double B right here, 7.6. And that's the excess return, and the triple B at 5.1. Of course, they like this area of that scale because that's where the return is at. They don't want to buy necessarily the AAAs, and my goodness, they're generally all filled with garbage, as we saw not only during the financial crisis, but even more recently. I covered some information around that. And we will see, as I'll note in a moment, with the fallen angels, how big of a problem this is, and how the Federal Reserve and the other central banks around the world will have to increase their purchases dramatically. The ECB corporate holdings under the CSPP are a meaningful share of the Euro IG market. I had covered this before. We looked at the corporate sector purchase program. You know what they're doing. There's all these different names that they have. The ASP, the CSPP, the ABC, and the 1, 2, 3. Well, ultimately what they're doing here is they're buying corporate debt. And I showed you the list, UBS, I believe. I'll put it, that information. I gave you that. If you want to see it, I'm sure I still have the video up, but it doesn't matter at this point. What we're looking at is an actual bailout of all of these big companies. You as the individual, you get a couple $100s here and there. This company consistently, I remember looking at all of the big European companies. You think of a European company, they're on there. They issue debt. Imagine this. They issue debt, put it into the market, and then we don't even need an investor to buy it because the central bank will print money and purchase that. Now, if that's not criminal, I really don't know what is. And people get into the system and they're thinking, oh, if you want to be rich, you got to buy in. But you don't understand the rich people, the actual rich people, what they do and how they created the system intentionally. It's got nothing to do with buying 7 shares of Amazon. 41% of the Euro IG index now yields in negative territory. It's absurd. It really is absurd, but this is what we got to deal with today. The value of the currency is declining rapidly. The system is unfortunately tearing itself apart, and we are only at the beginning of what is coming. 2020 saw the biggest wave of fallen angels in history. I talked about this before. Maybe I'll just quickly do a little diagram here for those who haven't heard me talk about this. But you've got all of these different bonds. You got the AAA. Those were so fantastic during the subprime. You remember that? Anyway, you make it all the way down to the BBB. And if this rating, let's say, gets downgraded at some point, as we saw, many of them did, as you see here, the fallen angels, that's what they call it, then it's considered to be junk. All right. So if it makes it into the junk, this is no longer able to be purchased. They have to sell. A lot of these funds have to sell it. And as a result, you have a cascading event that occurs. You got big problems along the way. But now, as you can see right here, a significant amount of them were a problem during this period of 2020. A lot of these companies had been really falling, as they say here. They're zombies. They can't pay back. They're going bankrupt. They're defaulting on their debt and so on. And then we have this. So of course the central banks coming around, the Federal Reserve, for instance, actually specifically buys some of these fallen angels. And it's not surprising. They don't bail you out. You're not a fallen angel. No. They'll give you $300 though. Commercial mortgage-backed securities delinquencies have increased to close to financial crisis levels. This is showing us the 30-plus day delinquency rate on the CMBS, and it's showing us 8.8%. I believe those are November's numbers, but ultimately we are looking at a very serious situation, not just what we see today, but going into next year. This is one, I think, my opinion here, the weakest link in the financial system today. So what do? What do the governments do? They see a problem and they print money over it. That's it. That's all they can do. The US Congress is on the verge of voting to spend $3 trillion this month alone as the national debt climbs to $28 trillion. Nobody cares. They're spending it on, quote, defense. I mean, what a joke. Anyway, defense is where they love to spend it. You got a lot of people hurting. You got people in the streets, 8 million falling into poverty. You've got all these problems with the fake unemployment rate, 6.7%. Why don't they spit in everyone's face? And they pump money into the quote unquote defense, which really, there should be a protest to change that word, because that is literally the opposite. And that's sinful. That's disgusting. Anyway, what we have is a time in which it's okay to print as much money as possible. Don't pull back on anything. And we will see the negative effects of this already taking place, but will get much worse. New York City's plummeting real estate sales cost the city $1.2 billion. Look, this is what governments do. They increase taxation. They print a whole bunch of money. They expect you to be paying for everything. They do not see the dangers in what they do, or they simply refuse to acknowledge it. There's different levels of it, of course, depends on where you're looking. But all I have to say is that you've got problems that are going to arise and they never want to deal with them. They just say, let's put it off for now and so on, but it never gets resolved. And that is truly unfortunate. They tell you there's no inflation. They keep saying this, and it is truly a disservice to everybody. And I really don't care how many individuals will deny it. I don't care what's going on, except for the average person that needs help. They need this information to be acknowledged. That's what this channel is about. It's to break down everything, to connect the dots so that we have the firepower. Because if we go in with 6.7% on the youth 3 unemployment rate. That's the only thing we've got. We're never going to be able to tell the whole story. Look at what's going on right here. Where's the inflation, buddy? Where's the inflation, GPS, you fearmonger, you piece of garbage? I'm unsubscribing from you. Okay, look, I don't really care. Wages, 10% since the year 2000, and that's a fake number as it is. But let's go with that. Let's say in nominal terms, there has been a wage increase of 10% since the year 2000. Sure. All right. Looking at this, housing costs 31.5%. I would love to see with 2020 numbers. I think that's actually a little outdated, but 31% for housing costs. Healthcare and college education costs right here, 55 and 57%. It's absurd to see what people are spending today on certain things, and yet your wages aren't going up. Now, if people buy 7 shares of Amazon, that's great. You can see those also going up significantly, but does that mean you're going to now sell those shares? Is that what you're doing? Because you don't want to sell those assets and then somehow pay for those increasing college and healthcare and housing costs, right? You want to keep that for a period of time. That's why this whole system that they've built up with the 401k and you're going to be so wealthy as long as you just keep dumping money in, it doesn't work. And that's because the rich have held that information into themselves. If people would read my books, they would get a little more insight on that. But unfortunately, today, nobody really wants to read. This comes directly from the Federal Reserve. They're saying that, well, you know what? We're going to allow the buybacks, even though they were really taking place anyway. We're going to allow some buybacks depending on the situation. Here it is, in the light of ongoing economic uncertainty and to preserve the strength of the banking sector, the board is extending the current restrictions on distributions with modifications. For the first quarter of 2021, both dividend and share repurchases will be limited to an amount based on the income over the past year. If the firm does not earn income, it will not be able to pay a dividend or make repurchases. Multiple big banks have already stated that they're going to be doing the dividends, doing the share buybacks. It's coming, have no fear. And more robots taking the streets. Walmart and Gatik go driverless in Arkansas and expand self-driving car pilot to a second location. This is happening. I don't see success in most avenues for all of this autonomous driving and so on. When it goes on the road where other people are, there's some limited areas where it'll be in an airport and it always goes on the exact same pathway and comes exactly back to this location. It can do it, but when it's on the open road with cars moving in and out, pedestrians getting destroyed by these vehicles. Anyway, I don't know how long this technology is going to take. I know the engineering is probably extremely difficult around it, but they're moving towards that direction. Billions and billions and billions of dollars are being invested in this type of industry. So certainly if somebody has some insight on this, you could definitely make a lot of money putting your money into this, because there are so many different startups that are happening that are associated with it. But there will be a lot of ventures that will fail. There's no doubt about it. So this is definitely a risky one, but for those who want the risk, this is certainly something that is very, very, something that many investors are looking into today. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. Simply by clicking one button on your screen, you help me out. Thank you very much. If you want to learn about e-commerce, you're interested in making money online, you want to know some information but don't necessarily want to pay anything, well, you can learn for free at the AmazonGPS.com. Hold on. Have you seen these 2 books? Because they have everything you need. I'm talking about all the charts, all the data, all the history. It's all in here. You can flip through the books. Check it out at the link in the description. But if you have not seen this video, you definitely want to check it out. So click on it and I'll see you there.